Central banks are the most powerful institutions nobody ever taught you to question. They don't run for office. They don't appear on campaign posters. Most people can't even describe what they actually do. And yet, they decide the value of your money. They steer your economy. They determine the worth of everything you've ever worked for. They can create wealth out of thin air, or make it disappear overnight. And the strangest part, they don't really answer to you. This is the story of how central banks rose to the top of modern finance, not as neutral referees, but as active players in a game they helped design. A story of hidden power, engineered stability, and control disguised as protection. Once you understand where this begins, you'll never look at your paycheck, your debt, or your savings the same way again. Let's go back to 1694. England was broke. After an expensive war with France, the treasury was empty. So the government struck a deal with a group of wealthy merchants. We'll borrow your money, and in exchange, we'll give you the exclusive right to create the nation's currency. And just like that, the Bank of England was born. It wasn't created to help citizens. It was created to fund the state and profit from doing so. That was the blueprint. A central bank existed not to stabilize the economy, but to ensure governments could keep borrowing. And over the next 2 centuries, that model spread across Europe. Private institutions, special privileges, the power to issue currency, the power to rescue governments in crisis, and in return they gained influence without democratic oversight. But in the United States, the story was different. Americans hated centralized financial power. The first and second banks of the United States were shut down after political battles over corruption and elitism. For decades, the U.S. had no central bank, and the financial system was chaos, private money, speculation, boom and bust cycles. Then came the panic of 1907, so severe that J.P. Morgan himself had to organize a private bailout. That crisis became the justification. And in 1913, the Federal Reserve was created. Officially, a decentralized system to stabilize the economy. In reality, a central authority with immense control over interest rates, credit, and money. And here's where things get blurry. The Federal Reserve is not a government agency. Its board is appointed by politicians, but the institution is independent. Its member banks are privately owned. It funds itself, not through taxes, but through interest on government debt. It operates in the background of global markets, making decisions that shape millions of lives without any public vote. So, who does it serve? Officially, maximum employment and stable prices. Unofficially, the same financial system it oversees. Look at 2008. The Fed didn't just lower rates. It created trillions, bailed out investment banks, and inflated asset markets. In 2020, during the COVID crash, it did it again. Markets recovered. Billionaires got richer, while millions lost their jobs, homes, and savings. The system was saved, not the people. Because when central banks act, they choose winners. When they cut rates, stocks rise. When they tighten, markets fall. When they print money, asset holders get rich. When they raise rates, the working class pays higher loans, higher mortgages, higher interest. This is not neutral. This is power. Since 2008, central banks have transformed the economy. Near zero interest rates, trillions in printed money, routine market intervention, asset prices exploded, stocks, real estate, commodities. For those who owned assets, it was prosperity. For everyone else, it was inflation. Wages stagnated, housing became unaffordable, savings lost value, People blamed politicians, they blamed immigrants, they blamed circumstance. Almost nobody blamed the entity controlling the price of money itself. Here is the uncomfortable truth. The modern financial system is designed to keep you dependent. Central banks reward debt. They punish saving. They incentivize consumption. And every intervention is sold as stability. But it's not your stability they're protecting. It's the system, the banks, the markets, the machinery of endless credit. And when the next crisis comes, because it will, the central bank will step in again, not to save you, but to save the architecture of the financial world. So what do? You learn how money works. You build wealth outside the system's traps. Own assets that can't be printed, reduce debt exposure, create income streams independent of bank policy, teach others what you've learned. Because financial education isn't about getting rich, it's about freedom. And freedom begins with understanding the system, so it can no longer control you. If this changed how you see money, hit subscribe.